Hello, Lotos.io. That's our official domain. You're welcome to visit, explore, and learn more about what we're building. Now let's talk about our core idea. Find your hidden gem. Let's talk a bit more about DeFi. What is it really? At its core, DeFi, or decentralized finance, is a branch of crypto and blockchain technology built on open protocols. Here, you don't have to trust a project's team or any administrators. You can verify everything yourself through smart contracts, through open source code. You can see exactly how the system works and analyze every transaction related to a token directly on the blockchain. And that, let's be honest, is the very spirit of blockchain technology, transparency and trust without intermediaries. By the way, Changpeng Zhao, I'm sure many of you know him as the founder of Binance, said long ago that DeFi is the future. And here are the facts. As of 2024, trading volume in DeFi reached $2.3 trillion. In CeFi, centralized finance, it's $21.6 trillion. So yes, DeFi still holds just 5 to 10% of the total market, but the trend is clear. Liquidity is steadily moving into DeFi, and it's entirely possible that the next bull market could push DeFi past CeFi in terms of volume. So what's happening right now? Major centralized exchanges like Bybit and Binance are being forced to adapt. They're already adding the ability to buy tokens on decentralized platforms right inside their apps. But there's one problem. DeFi still lacks the analytics and convenience that users are used to. And that's the gap waiting to be filled. The market is clearly moving toward decentralization. Need examples? CoinMarketCap and CoinGecko have already integrated trading terminals that let users buy tokens directly from DEXs. Bybit recently launched its own decentralized exchange on Solana. Users are migrating to DeFi, and the platforms are following them. And that makes perfect sense. Why? Because decentralization means open protocols, transparent transactions, and most importantly, control over your own funds. Here's a simple example. When you buy a token on Binance, the transaction doesn't hit the blockchain, it stays inside their internal system. But on a DEX, every single operation is written to the blockchain publicly. Anyone can find it, verify it, and analyze it. That's true transparency. And that's exactly what blockchain was created for. Now, let's talk about control. When you keep your assets on centralized exchanges, you don't actually hold the private keys. In reality, you're asking the exchange for permission to access your own funds, and they decide based on their own rules whether to give it to you or not. But in DeFi, it's a whole different story. You have your wallet, you hold the keys, and you alone decide what happens to your assets. That's real financial control. Now let's touch on the blockchains themselves. Why are they so interested in DeFi? Because every DeFi transaction is a blockchain transaction, which means more fees, more rewards for validators, and more activity keeping the network alive. In CeFi, none of that exists. Those transactions happen behind the scenes and don't touch the blockchain at all. And one last key point, regulation. Centralized platforms are already facing tighter and tighter regulation. But DeFi, that's going to be the last place it reaches. A perfect example is the Uniswap case. They were taken to court and they won because they proved they're fully decentralized. That's why DeFi isn't just a trend. It's the natural evolution of the entire crypto industry. Let's take a look at some fascinating stats. In 2021, only about 8,000 tokens were launched. Today, that number has exploded to over 13 million, and it keeps growing. Creating your own token is becoming easier and more accessible than ever, and the market is being reshaped before our eyes. Back then, things were simpler and more cyclical. Investors would buy altcoins and just wait for the next wave of growth. But back then, there were only a handful of assets. Liquidity was concentrated in a small number of popular coins. Now, that has completely changed. It's become easy to launch new tokens, and market makers no longer need to go back to old assets that lack a strong foundation or business model. Why would they, when they can just launch a fresh token aligned with the current market narrative? The market has transformed entirely. Liquidity is no longer pooling in a few places. It's now spread across countless new tokens. That's not necessarily good or bad. It's just the new reality. Here's an eye-opening fact. Within the first 24 hours after launch, new tokens on just 4 blockchains, Binance Smart Chain, Ethereum, Solana, and Base generated a combined trading volume of $758 million. And that's just 4 blockchains. Today, we have over 100 blockchains in the ecosystem and more than 1,000 decentralized exchanges. In other words, the scale of the market is massive, and token launches have become one of the main engines driving today's market dynamics. This is something worth keeping in mind, whether you're building your entry strategy, choosing a project, or simply trying to understand where the trends are heading. Let's talk about scam rates in the space. Roughly 95% of scam projects across EVM networks are directly tied to the smart contract source code. What does that mean in practice? A user buys a token and immediately loses all their funds because when they try to sell it later, they simply can't. That's one of the biggest problems in today's EVM-based markets. The remaining 5% of tokens actually can be traded and profited from. But even there, you're facing challenges. Low liquidity, limited upside, unstable marketing efforts. Now let's take a look at what happens after filtering through our platform. When a project passes the Lotos screening process, the scam rate drops to around 30%. In other words, 7 out of 10 projects we select are truly viable and show strong potential. Solana has become one of the best blockchains for launching such tokens. The network has seen explosive growth in interest from retail investors, especially in the meme token space. And there are a few reasons for that. Extremely low transaction fees, professional marketing teams behind the launches, and most importantly, clean and secure contract code. Solana has standardized and verified smart contract methods. If someone tries to alter them, the blockchain immediately flags the changes. This gives users a clear sense of security. If the token is verified, you can buy and sell it without issues. That's the kind of model EVM networks should move toward. It's only a matter of time. At Lotos, we're already working hard on algorithms and protocols to eliminate such vulnerabilities at the code level, and we're confident it's absolutely achievable. Let's just look at the numbers. In 2024 alone, over $3 billion was stolen due to malicious smart contracts. To be precise, $3.16 billion. This is the chaos we're fighting against. To make the market more honest, more secure, and more transparent for everyone. Now let's talk about the two sides of the market, the problems and the opportunities. First, the problems. What are the main issues we see in tokens today? Poor tokenomics, bugs or vulnerabilities in smart contracts, lack of liquidity, or certain behavioral patterns that simply make a project unsustainable. And now, the opportunities. What kind of potential does this market actually offer? Many newly launched tokens start out with low liquidity, but despite that, they can experience massive price surges, sometimes growing by hundreds of thousands of percent, amazed, and in rare cases, even millions. And this is where it gets interesting, because the multiplication potential is enormous. That kind of upside naturally attracts attention and creates a real chance to profit. Let's look at some real examples. One token grew by 17,500x, another by 50,000x, a third by 500x. These could be meme coins, narrative-driven projects, or tech initiatives that adapt quickly to emerging trends. You might be asking, who are the lucky ones who managed to buy these tokens early? Well, the truth is, these are examples from our own experience. We actually got into those tokens at the very beginning. Projects like Wolf, Brett, and others, we tested them ourselves using our own capital. Originally, we built Lotos as an internal tool to move faster, make better decisions, and grow our own portfolio. But as we kept watching the market evolve, seeing how platform functionality changes, and how exchanges started introducing new restrictions, we came to a very clear conclusion. The market lacks the tools needed for safe and convenient trading. And that's not just a small issue, that's a global problem. A problem that affects billions in trading volume and causes massive financial losses. That's when we had the idea. Why not open up our technology to users? Why not help the market by offering tools that are desperately needed, and in return, earn revenue through fair commission? Let's dive deeper into how capital flows are distributed. and take a closer look at where the liquidity actually is. We'll start with liquidity providers. They account for 13% of total trading volume. These are services that help users find the best possible price at the moment of exchange. In short, they ensure you get the best rate available. Next up, sniper bots. They've generated over $60 billion in trading volume and currently hold a 2.6% market share. What do they offer? They allow users to instantly buy tokens and set take profit and stop loss orders. Their main value is speed and basic automation in trade execution. Then we have trading terminals, which account for just under 0.9% of the market. They offer more flexibility. You can connect to various meme pad platforms, use advanced charting tools, and set up the same take profit and stop loss strategies. There's a great example of one company in this space that reached $22 billion in trading volume in a single year and earned nearly $200 million in commissions alone. And all of that with just 25,000 active users. Now, compare that with Binance, 275 million registered accounts, 25,000 versus 275 million, and yet that small DeFi audience already accounts for nearly 1% of the total market. What does this tell us? That even a small but active user base in DeFi can generate massive trading volumes. And that means the true potential here is enormous and still largely untapped. The rest of the market is made up of other tools, around 2.5% in total. But here's the most important part. Direct trading on DEXs makes up 81% of all trading volume. That's right, 81%, which means the market is still wide open. It's not yet claimed. The challenge? DEXs lack the familiar infrastructure we're used to. There are no charts, no analytics, no way to place take profit or stop loss orders. Anyone who's used a DEX knows this well. You simply show up to swap one token for another. Quick, simple, with no extras. And that's fine. The job of a DEX is clear, to provide liquidity to the DeFi market. But now, let's imagine that Lotos captures even just 1% of that total volume. That alone would represent significant trading turnover, especially when you consider that most people still don't know how to use DEXs, and many have never even tried DeFi. We are now in a phase of active growth, and the next surge could happen very soon. That's why we're ready to take our place in this market. Why us? Because we combine deep expertise, powerful technology, and hands-on experience to solve the core challenges of the DeFi market. First, comprehensive crypto project analysis. We go beyond the surface. We analyze smart contracts, tokenomics, liquidity, source code originality, code provenance, even the token's digital footprint across the web. We don't just look at the price or chart, we dive into the structure, the context, and the hidden connections behind every project. Then, 4 years of dedicated work, analytics, development. First, we spent 2 years studying the DeFi market, how tokens behave, how users interact. Then, 2 full years building out our own solution. In that time, we've already analyzed over 3.5 million tokens, and that scale gave us a unique edge. We've gathered insights that let us detect risks and patterns invisible to most others. This is experience honed over time and proven by real data. We're also actively contributing to the future of DeFi AI. We bring decentralized finance and artificial intelligence together in real working tools. Our AI already analyzes tokens, detects potential risks, and suggests safer actions in real time. This isn't theory. It's already live and working today. Now let's talk about automatic scam protection. Why do we call it automatic? Because if a project is identified as a scam, it's instantly blacklisted. And every user sees a clear warning. No one will accidentally buy that token again. But we go even further. Any other projects connected to that scam are automatically blocked as well. Let's compare that to how the market works today. What's the typical pattern? One user buys a scam token, then another, then a third, a fourth, and so it spreads like a chain reaction. This is exactly what we stop. Our system blocks the spread at the source. It doesn't let the scam go any further. Now, let's talk about the team. Over 10 years in crypto, our team is made up of specialists, each one an expert in their field. Combined, we bring over 150 years of experience. This is real-world practice and deep professional knowledge all focused on a single mission: to make DeFi trading transparent and secure. We're not just building a product, we're shaping a new standard for how access to DeFi should look and feel: clear, secure, and fundamentally different. And we're constantly expanding our partnerships to give more teams, traders, and developers access to the tools they really need. Today, we can confidently say, we know what a DeFi trading terminal should be. Lotos, Web3 ecosystem. What is Lotos? Lotos is a decentralized, multifunctional platform for analyzing, trading, and tracking DeFi tokens. Whether it's Bitcoin or a brand new token, our mission is to make DeFi trading as simple, accessible, and truly decentralized as possible. Why does decentralization matter? Because most tools on the market today are still far from truly decentralized. Many of them ask for your private key during registration or even generate it for you. What does that mean? That we're still stuck in a centralized system, just with a new supposedly yours wallet added on top. We spent a long time asking a single question: how do we build a truly decentralized protocol, something with no equivalent on the market? And we found the answer. We're now close to completing this system, one where you alone control your assets and no third party ever holds your keys. This model is one of the reasons we successfully passed legal audits. It's our foundation for moving toward full decentralization and DAO governance. More on that soon. So, what's inside the Lotos ecosystem? MEV protection. To guard against front-running, smart routing, to find the best price across connected DEXs, limit orders, smart grids, sniping tools, all designed for a smooth and secure trading experience. Security Scanner, a proprietary smart contract analyzer built entirely on our own algorithms. We don't rely on external APIs. We scan and assess smart contracts, tokenomics, liquidity, social and online presence. For example, we can detect whether a project's website is original or just a reused copy from previous scams. AI algorithms. Our AI analyzes tokens across EVM networks and can assess a token's quality even if the contract hasn't been verified yet. Why is this important? Most tools only provide analysis after verification, but with Lotos, you get real-time insight. That's critical because many tokens are launched with liquidity added before the contract is verified. By the time verification happens, the price may have skyrocketed, and you're entering at a much worse level. We're also building an AI assistant that alerts you to potential risks in real time. For example, you're about to buy a token, and it says, be careful, in 10 days, 30% of the token supply will unlock. This could lead to a 70% price drop. And now, you know that before entering the trade. That's real risk management. All of this analysis is converted into a clear, easy-to-understand token score, a rating from 1 to 100. You no longer need to guess. You're making decisions based on data, not hype. Our utility token is your key to priority access platform status, DAO participation, referral program, a reward system for contributing to the growth of the community. There will be two types: a general referral program and a custom one based on your involvement and support for the ecosystem. Crypto Academy. We understand that the insights we've gained are still only known to 0.01% of the market, and we're ready to share them, to teach, guide, support. Because the faster users understand how the market works, the fewer mistakes they'll make. And the fewer mistakes, the stronger the entire market becomes. Now, let's talk about our partners. The Lotus project has already secured a number of key partnerships. One of the most recent is with Bastion, a decentralized social network with over 1 million users. Its founder, Daniel Sotkoff, is a deeply thoughtful person and a true professional in his field. Among our other partners, Honeypot.is, Service Info Group, Memory Hub, ApeSpace, TradingView, Coin Detector, and UNCX. We've also held direct negotiations with the teams behind Mantle and Avalanche, blockchains that currently rank 40th and 16th on CoinMarketCap. Both teams have expressed genuine interest in our platform and want to see Lotos integrated into their ecosystems. So what does this tell us? It tells us that what we're building is real, needed, and in demand by both the market and the community. What is the LTS token? It's not just a digital asset, it's a key to governance within the DAO, to the growth of a decentralized ecosystem, and to the coordination of its economic model. All the funds generated by the Lotos platform are stored on a smart contract, and only the community decides what to do with them. For example, use part of the funds to buy back tokens, add liquidity, issue grants, or invest in external projects and technologies. LTS is a signal of your involvement. It's your right to stand at the front lines and to co-create the future of the platform alongside the team. We'll also have an open dashboard that shows the top token holders, and they will be the first to access new features, such as automated take-profit stop-loss, fast token purchases, and much more. Adding on, in addition, LTS gives you a say in protocol-level parameters like fees, rewards, and ecosystem rules. You'll be able to propose initiatives, vote on changes, and become part of the governing community. Tokenomics. The total supply is 1 billion LTS tokens. Thoughtful 75% is allocated to the foundation, with a 5-year vesting schedule. These tokens are dedicated to DAO development, product growth, and incentives for founders and strategic partners. 15% is allocated to the core team, also with a 5-year vesting schedule. This ensures long-term motivation for the key professionals who are building the platform every single day. 5% is reserved for internal funding, with a 1-year vesting period. These funds cover legal and operational expenses. Emphatic, the final 5% is allocated to liquidity provisioning on exchanges, with no vesting. This is essential to enable trading activity and ensure stable liquidity from the very beginning. Audience growth simulation. All projections are based on our in-house analytical model, which incorporates key behavioral and technological factors from the DeFi space. As of today, our website attracts between 3,000 and 3,500 unique users per month. Anticipatory, here's what our forecast looks like. 2026, 40,000 monthly users. 2027, 117,000. 2028, 250,000 active users. 2029, 500,000. Excited. 2030, 1 million monthly users. Confident. These aren't just optimistic numbers. They reflect the real potential of our platform and the growing demand for tools that actually work. Results and potential. Right now, we're still in beta. We're actively integrating new technologies, improving the interface, and refining key functionality. And yet, even today, our platform has already processed over $1.5 million in trading volume. And that's just the beginning. Many users already rely on Lotos as their go-to analytics platform. Now it's only a matter of time before they fully adopt our trading terminal. Our growth targets. By the end of this year, 48 million in trading volume. We only need 2,800 active terminal users to get there. In 2026, $1 billion. In 2027, $3.75 billion. And here's the key number. By the end of 2027, that trading volume could generate up to $50 million in protocol revenue, all stored on a smart contract and fully governed by the DAO community. Automated trading system. We're also testing our automated trading engine. Currently in active development. Yes, we're deliberately trading with both strong tokens and even known scam tokens. Why? Because we want to deeply understand the vulnerabilities of the market, not just work off templates, but build a system based on real user behavior and patterns. Even in beta, we've already reached positive expected value in testing. Scams still get through, but we're constantly improving our filters, algorithms, and scoring models. And only when we're confident in the system's reliability will we open it up for public access. So own the LTS token and take part in governing the DAO and allocating its resources. We hope you've enjoyed this session, and we look forward to seeing you on the platform, Lotos. Thank you for your attention. See you soon.